Just overnight, what was a shadow war between Iran and Israel has absolutely exploded into open conflict, and it is sending a massive shockwave through the global economy. Now, this isn't just another headline. This is a huge geopolitical shift, and it is already moving markets in a big way. So let's break down exactly what's going on. Right, this is not just a regional story. This is an event with immediate and, frankly, far-reaching financial consequences. I mean, from oil fields in the Gulf all the way to stock exchanges in New York and Tokyo, the tremors are being felt everywhere. Let's dig into what happened and, more importantly, why it matters so much. So you might be wondering, how did we get here so fast? Well, this escalation wasn't completely out of the blue. It's really the culmination of years of tension. But it's the speed, the sheer speed at which it all unraveled that's truly staggering. Let's just take a quick look at the timeline. Okay, look at how quickly this happened. On February 28th, U.S.-Israeli strikes hit Tehran. The very next day, Iran confirms the death of its supreme leader. And then, almost immediately after that, the retaliation began, a huge wave of missiles and drones. This is an absolute game changer. The first and most immediate economic impact was on the lifeblood of the global economy: oil. Whenever this region becomes unstable, the entire world kind of holds its breath, just waiting to see what happens to the energy supply. And here is exactly why this is such a big deal: the Strait of Hormuz. Think of this narrow waterway as the main artery for global energy. It's the only route for all that Gulf oil to reach the rest of the world. So if it gets blocked, the global economy feels that pain almost instantly. And here's the number you need to remember: 20%. A full 1/5 of the entire world's daily oil consumption flows right through that one single narrow strait. So if that artery gets clogged, the entire global system feels the pressure, and it feels it right away. And, well, that's pretty much exactly what happened. The market's reaction was swift and it was severe. Brent crude, that's the global benchmark, it jumped 9%. West Texas Intermediate, the U.S. benchmark, surged 8.5%. Look, this isn't just a small fluctuation. This is a major price shock, and it's driven by pure geopolitical fear. So the big question is this just a temporary spike, or is it the start of something much bigger? Well, experts are already warning that if this conflict continues to mess with shipping, we could see oil prices blow right past $100 a barrel. And that would mean serious economic pain for pretty much everyone. You know how it works. When fear spikes, money moves. And right now, it is moving into one of the oldest safe havens in the entire world: gold. What we're seeing is a classic flight to safety playing out in real time. So what's going through an investor's mind right now? It's actually pretty simple. They're dumping riskier assets, things like stocks, and they're flocking to the perceived safety of gold. When the world feels unstable, investors want something that feels solid, something they can count on. And the scale of this move is, well, it's pretty stunning. In just a single trading session, the price of gold surged by $110 an ounce. That is a massive jump, and it's a direct measure of the level of fear and uncertainty that has just gripped global financial markets. Okay, so this brings us to the broader picture. This anxiety isn't just bottled up with the oil and gold traders. Oh no, it has spilled over into the entire global stock market, and it's putting absolutely everyone on edge. And you can see the pain is being felt right across the board in the stock markets. As you can see, major U.S. indices are all in the red. That's a direct reaction to all this uncertainty. But the real tell, the real sign of fear, is in the Gulf, where regional markets are plunging. That's not just a statistic. That's capital literally fleeing the immediate area of the conflict. It shows you just how potent the fear is right there at the epicenter. And these falling stock prices, they reflect a much deeper fear about the real economy. Forecasters are already modeling what's called a stagflation scenario. Now, that's this toxic mix of slowing economic growth and rapidly rising prices. Just think about that for a second. Your paycheck buys less while the economy is shrinking, making it harder for businesses to grow and for people to find jobs. It is literally the worst of both worlds, and it is a very real threat if this crisis drags on. This is the key question, isn't it? How do all these huge global events, oil prices, market volatility, geopolitics, how do they actually connect to our daily lives and to our wallets? Well, the connections are pretty direct. That surge in crude oil, that's going to translate to higher prices at the gas pump for you. Those rising energy costs, they ripple through all the supply chains, leading to broader inflation on everyday goods. If you have a retirement or an investment account, you're going to feel that increased stock market volatility. And if you were thinking about buying precious metals, that safe haven rush means higher prices for gold and silver. So here's the big question we're left with. Is this just a temporary crisis, or is this the beginning of a new era of global disorder? This quote, I think, sums it up perfectly. We may be entering a risk-heavy world where geopolitics, not economics, is what drives the markets. And the question really is, are you prepared for that world?